Welcome to the Rise of Cryptocurrencies show. Today, Trace Mayer is joining me. He's one of the early investors into Bitcoin, as well as an important blogger in the cryptocurrency world. Trace, how are you, sir?
Doing wonderful. Glad to be here again.
Trace, it's no secret that you've been buying Bitcoin since the very early stages, and without getting too detailed, you've made a substantial fortune. How has life changed, if at all, for you?
Yeah, I mean, that's kind of a much broader question. And I suppose it's very personal, because when we look at what drives our life, what are the things that we really love, you know? And the things that we really love, by analogy, they're kind of like the sun. And then our thoughts are like the planets that revolve around what we really love. And so we're constantly you know, like just like the planets make their regular rotations, it seems like our thoughts make regular rotations. And those rotations are based around the things that we love. And a lot of people, they like I mean, it raises very existential questions like, why am I here on this planet? What am I doing here? Like, what is this life supposed to be about? What am I supposed to be accomplishing? What am I supposed to be like becoming? Not as opposed to just what am I supposed to be doing? And those become very personal questions. They become they go to the heart or the essence of who we truly are and who we truly want to become. And so in my case, I mean, don't get me wrong. Like, I love money. It's great. Like, I love to study about it. I love to learn about it. But it's not my ruling love. It's not the center of everything that I focus on. In fact, I I really don't care much about money at all. What I care about is I care about the usefulness or the ability that I'm able to effectuate change and help other people. And having money is a resource that enables me to do that. And so what I found is that money just makes people more of what they are. It just makes people, if you're a bad person, if you get lots of money, you're just going to be a worse person. And if you're a good person who likes to help and serve other people and be of use to other people and like be compassionate and things like this, then you're going to be a better person. But if you're hateful and revengeful and you're focused so much on your own reputation and you're focused on uh, like what other people think of you as opposed to how you can serve them, then getting more money is just going to make your life even more miserable. And so just because we accomplish certain things or just because we calculate correctly economically, which is which raises another point. Like, this isn't luck. Like, I didn't just luck into Bitcoin, and I was actually very successful even well before Bitcoin. I when I was very young, I learned about stocks and I invested in the internet bubble, and I sold all of those before the giant crash, and I reallocated the capital mainly into oil stocks, and then we had the commodity run up, and then I allocated capital into gold, and then gold ran up, and then I allocated capital into Bitcoin, and Bitcoin ran up. And so, I haven't really there's not really anything that I can do now that I wasn't able to do before Bitcoin in terms of monetary or financial stuff, which is just stuff. But I find it's definitely a very useful tool in being able to accomplish or do more things. And this is one of the reasons. Like, I don't ask anybody for money, really. I don't ask, like, I'm not selling a product. Like, the reason I even talk about this publicly is because I have this unique skill set where I understand the money, I understand the philosophy, the cypherpunk philosophy, I understand sound money, I understand how it interacts with our political machinery, and this spreading this message or this idea of monetary sovereignty and then funding the software that enables people to take control of their monetary sovereignty for free, armory. This is a way that I'm able, as Steve Jobs says, to put a dent in the universe. And so, there is no, in terms of like things that we could do to really change the world to make it a better place, reinstituting sound money and not having people being subjected to spurious currencies that can be confiscated through inflation, which is a form of taxation without representation, without due process of law. If we fix the money, we can fix so many of the problems that we have in this world. And so, that's really what it's more like. That's what it's about for me, more than just making a quick buck. Like, I've made plenty of bucks. Like, I'm good at making bucks. Like I have a talent for that, but I don't love it in the sense that it's not my primary motivation. It's not my primary purpose. It's just a tool that I use to accomplish things that are more important. And those things that are more important is reestablishing sound money and monetary sovereignty for people all over the globe. So, I mean, it is definitely kind of a very personal question, but I hope I answered it a little bit for you.
Let's tackle the topic of Bitcoin because it is facing challenges other cryptocurrencies aren't facing yet, scaling into the big leagues. How long of a process do you think this is?
Well, we already have over 3 or 5 million users, at least based on most of the reputable attempts to analyze how big the community is. But trying to scale Bitcoin where we can have billions of users, it's going to take a lot of work. It's going to take a lot of time, and it's we're just in the very, very beginning stages of this. We're building out the first network effect of speculation, which is mainly just store of value. It's digital gold. But then we'll build additional layers, so things like Lightning Network, that will enable more uses such as currency or day-to-day transactions. But in order to have currency, you have to have sound money. And part of that aspect of sound money is immutability and irreversibility of the payments. So you cannot have peer-to-peer electronic cash unless you have a fundamentally sound from a technical standpoint foundation that is censorship resistant and immutable. And from that foundation, we can then build out these other network effects, such as day-to-day usage as a currency, for the second and third network effects, building out more security in terms of the miners, building out more developers and use cases on top of it with the fifth network effects, integrating with the financial system as a sixth network effect. But we're just in the very initial stages of this first network effect. And we can be patient, and we can take territory very consistently, very methodically, very conservatively. And once we take that territory, that monetary sovereignty territory, we never get up. That's what we need to do. We should never compromise any of the territory that we've taken by overreaching or overextending ourselves to try and take more territory than we can adequately defend. And so that's where I think I diverge with some of the other people who have different proposals or different solutions for scaling Bitcoin, because we got all the time in the world to do this. Like, we don't have to do it tomorrow, and we definitely don't have to compromise Bitcoin in any type of a way to do it tomorrow. We can do it in 6 months, 3 years, 10 years. We can do it later. But once we take the territory of monetary sovereignty, we should never give any of that territory up. Yeah, I mean, that's just speaking like strategically. This would kind of be a board of directors level discussion, because you can have differing opinions on how you want to extend a company or go into different growth, try to grow or go into different markets or things like that. So I mean, this is just my own opinion, and other people have other opinions, and it's not like any one person is in control of Bitcoin. I mean, we got lots of different personalities and lots of people interacting with Bitcoin. And so, it's not like any one person has all the answers. This is just my answer and my way of approaching it. But I think that a lot of the people that are in the Bitcoin core development have a very similar mindset. They want to have wide and broad consensus. They want to be extremely safe and conservative. They don't want to try and ram changes down people's throats and against their will. And so, it's this is all part of the evolutionary process of a free open source software and new internet protocol.
How has the Puerto Rican power grid shutdown affected your overall attitude towards diversification into assets which aren't 100% purely digital?
I'm not sure what the assertion is because, if you have a solar panel, and a cell phone, and a satellite dish, you could be using Bitcoin in Puerto Rico. That's all the infrastructure it takes. Bitcoin now has custom internet infrastructure that other uh, internet protocols do not have. We don't, you can use satellites. You don't have to rely on fiber optic cables or any of this stuff. You could broadcast transactions with an Iridium satellite phone. So, but in terms of analog assets as opposed to digital assets, I mean, I like having physical cash on hand, dollars or euros. I like having gold and silver. I like having food. I keep at least a few months worth of food on hand or on supply, just as a storage. I keep lots of extra water just in case, not only for me, but for any neighbors that might need it also if our power went out or we had some type of a natural disaster or something. So I think, the motto "be prepared" is, Bitcoin. You can't really eat Bitcoin. So, if you're in an emergency situation like Puerto Rico or the hurricanes in Houston or whatever, well, one, you would want to get out of there. And Bitcoin definitely serves a purpose as a last plane account, meaning if you have to take the last plane out of somewhere, where do you go and how do you maintain your standard of living? Like Bitcoin is a phenomenal tool for that. But if for some reason you're not able to get that last plane out and you survive the natural disaster or it strikes in a completely unpredictable way, like an earthquake or something, then, Bitcoin is just one of the tools in the toolkit that people can use. And I think they should have it there. But by no means do I think it's the only tool in the toolkit. And we should have lots of other tools in the toolkit, things like water and food and gold and physical cash and not having a bunch of debt, but still having credit cards so you can operate with those if you need to. So, I would like to look at things in a very practical way. Like, what's the most practical solution to solve the problems that we encounter?
Interesting alternatives, but I wonder how many Puerto Ricans own such self sufficient solutions because it would require a large pool of people to make this a viable option. Otherwise, you might have access to your bitcoins using what you described and the equipment you described, but the rest won't be able to accept them. I want to move on and ask you, are there any other cryptocurrencies that are rising stars in your opinion?
Yeah, so that's a great question, and I don't think that all the great minds are only in Bitcoin, or if they're in Bitcoin, I think that they do lots of other work on these other currencies too, because these other currencies can be very good research and development playgrounds where we can run experiments, but not compromise a $120 billion market cap. And so some of the ones that I like, for example, I like Dash, and I interviewed Evan Duffield when it was $3 and it was 0.009 Bitcoin, and currently it's $330 and about 0.054 Bitcoin. So if you had bought Dash when I did that interview on my podcast, you would be up 6x in terms of Bitcoin, which is one of the very few altcoins out there that has actually outperformed Bitcoin over a significant period of time. And so Dash is very interesting in their governance model, how they have these master nodes, how they have the budget proposals, things like this. It makes some fundamental innovations, I think, in how the cash flow statement is used when we're dealing with cryptocurrencies. So I kind of like that. I like things like Monero and some of these other more private, more fungible currencies, but they have their problems. Like Monero's got some significant problems when it comes to scalability and not being able to deal with the UTXO sets and hard forking every couple of months. I mean, that's kind of a joke, but so we've got, and then of course there's Ethereum. I like Ethereum and the smart contract aspects, but I think that the developers over there, man, they like move way too fast and break way too many things. And as we just saw within the last couple days, there was another bug found in the Parity multisig wallet, and it locked up $300 million worth of ether. And so if your model for helping your currency's price increase is to destroy a lot of money by locking it up because you have bugs in smart contracts, and you have a very open scripting language as opposed to one that's much more closed like Bitcoin. I just don't think that's a very good idea. But then, of course, Ethereum's trying to meet a different market need than Bitcoin is. But then you have things like Rootstock that can run as side chains on the Bitcoin network, and you can do all this experimenting and still be interoperable. So, the space changes so fast, and there's so much to kind of be alert and aware of, and be kind of very leery of. I mean, the Parity wallet lost $30 million a couple months ago. It just had a bug, locked up $300 million. Yikes! That's just kind of scary, So, like, no, I wouldn't want to keep any significant amount of money in some of these other blockchains.
As you know, Trace, Wealth Research Group really came out strongly in November of 2016 and March of 2017 in favor of Ethereum at $10 and $12, Monero below $5, Steam at 16 cents, Bitcoin at 400, and Dash at $9. So lately we've covered the launch of the first publicly traded blockchain mining company, Hive Blockchain Tech, in which I am personally a sizable shareholder for the long term, and it almost gained 900% in 2 months. It's been a crazy ride. Listeners who want to get involved in this industry from a vocational aspect, what do you advise them to do, or what would you do personally if you were them?
Yeah, I suppose I would look at, like, what are my skills or my talents? What do I really enjoy doing? And then I would build on or work with those talents or skills that I have. Obviously, there is an unsatiable demand for software developers in this space. So, learning statistics and probability, learning number theory, of course, taking your computer science classes, perhaps even taking some electives, or perhaps even a master's degree in something like cryptography or internet networking, networking protocols, things like that. Getting a solid foundational base. Also finding some type of a mentor to work with, going and contributing to some of these open source projects for free on GitHub, because that becomes a corpus of work that you're able to point to, or a portfolio. And so then when your business card, yeah, I mean, like, nobody really cares about college degrees anymore, because one, they've been so politicized, two, they've been subsidized, and three, they just aren't a very accurate measurement or signal to the market that you can actually do something. But your GitHub repository, the pull requests that you've made, the software code that you've written, that's that shows stuff that you've been able to do. And so that becomes very helpful, because for a hiring officer, because they're like, oh yeah, they're able to do something. And really, you have to be able to do something that's useful if people are going to pay you to do it. So if you want to get a job at Kraken or BitPay or Coinbase or one of these companies, you're going to have to be able to do stuff that's useful. And so, that's kind of what I'd recommend, especially for the new kids in high school or college. Like, definitely have some background in programming or computer science. Like, I took first I taught myself how to program when I was in middle school, but then I took, I think, my first programming class as a freshman in high school. And so, at least having some fluency in being able to program or get a computer to do what you want it to do is an important thing. So even if you're a business major or an economics major, perhaps even having a minor in computer science would be a good idea. And if you're already a software developer out there, get in and dig in, create your own project, have your own GitHub. That way you can point to, hey, I did this. Because it's like, oh, you're a developer. You can do something. Prove it, and you prove it with your GitHub.
What's next in terms of the relationships between governments and the cryptocurrencies?
Yeah, that's definitely a very interesting question to address if you're in government. And you mainly just you have two choices. You have repression or regeneration. And when we're dealing with an old, incumbent, antiquated, obsolete system, do you protect the status quo by stifling innovation, or do you create an environment where innovation can happen? If you stifle the status quo by introducing laws like you have to walk in front of the horseless carriage with a red flag, you're going to lose you're going to lose the innovation race. That's why the major car manufacturers are in the United States and not in England. Uh, and then if you're not manufacturing the cars, how do you manufacture airplanes that need engines too, right? And so, then and why do you think the United States is by far the leader in aviation? And when we're dealing with controlling the world in terms of as a military power, you have to control the skies. And increasingly, you have to control space. And so China and Russia and these other players, they're nowhere near the dominance that the United States has. And I think it's largely because they've regulated and repressed the innovation that has happened in their economies. And as a result, not only are they not as rich, but they're also behind geostrategically in terms of the technology that they have.
If I
And so,
may intervene just for a sec, it's very interesting because it brings back in history to where China was the dominant empire, but then it built this wall to protect its riches. But actually, that wall closed it off from the rest of the world, and nobody even knows because it's not taught in our modern day history books that China was the dominant and most rich, most knowledgeable country before the wall. And so it's very interesting that they are repeating those same mistakes.
yeah, not only did they build the wall, which largely cut them off from a lot of new ideas, new ideas like heliocentric theory and calculus and all the stuff that happened in the Renaissance, but also they repressed their navy. And so this little tiny island became the world's dominant naval power because of their ship making and all of this stuff. And China really missed the boat, and they're still trying to recover from that 500 years later. So anytime you try to make numbers illegal or make math illegal, or try to retard science, it doesn't seem to work out well for either the ruling elite or their populations. They become the poor people in the world. And if you're the poor people in the world, well, guess what? You're easy pickings geostrategically. And so, we're seeing everything from soup to nuts in terms of how governments are approaching this topic. Some are, much more repressive. Others are middle of the road, like United States. Others are approaching it with open arms. Places like the Isle of Man in 2013, 2014, they passed legislation, signed it into law with the prime minister, and you can use Bitcoin and cryptocurrency for pretty much everything, any type of financial stuff there. You've also got Japan, major world power in terms of their economy and everything, and they're embracing Bitcoin in a huge way. And so, if you don't embrace Bitcoin, I mean, what are you going to do? Repression? Well, like let's look at the countries that engage most seriously in monetary repression. North Korea, Venezuela, Argentina, basically anywhere that's poor, they've repressed monetary innovation and evolution to a huge degree, and they also usually don't have very solid property rights at all anyways. And so you have to have very strong boundaries on property rights that are enforced with the rule of law, not arbitrariness. And then capital can begin to get accumulated and allocated, and savings can happen, and then the underlying people in the economy can be that much more productive. And so, that's and we're talking about building out the next stage of the internet. I mean, this is already proving to be big, and it's going to be absolutely ginormous. And so like there's a lot of opportunity for countries to completely shift their standing in the world by harnessing and using and inviting and innovating in this space. And so uh, but it's kind of up to the politics of each country, and you know, countries can be poor. There's no shortage of that on this planet. The Singapores, the Switzerlands, they're kind of anomalies. Protecting property rights, enabling business and commerce, being very useful to the underlying business interests and people and stuff like that.
What are your views between the correlation of rising interest rates and cryptocurrencies, specifically Bitcoin?
Yeah, I mean, fiat currencies are the common stock of nations, and they're definitely going to be around probably for the next couple decades, in a large way. Uh, and Satoshi, I mean, he put this in the Genesis block, bailouts right in there, Chancellor on the brink of bailouts, and so he saw this environment that we're in, and Bitcoin as a potential solution to it. Now, Bitcoin raises so many interesting questions. Perhaps most critical to this discussion would be, what is the risk-free asset? And by extension, what is the risk-free rate? Most people would say, oh, the United States dollar, and treasuries. That's your risk-free asset and your risk-free rate. But then you're dealing with something that is not limited in amount by internal characteristics. It can be seized or confiscated. It's held by a third party. It's still subject to exchange rate risk with other assets out there. We don't know how many actually exist. We don't know how many will exist in the future. Why is that the risk-free asset? I mean, there are just so many risks associated with it. But with Bitcoin, you can hold the private keys yourself. It's censorship resistant and immutable, meaning nobody can just arbitrarily seize it or take them from you. And so it's really only subject to exchange rate risk when you think about it. It's priced relative to other assets. Even gold has a higher risk profile than Bitcoin does. And I would argue that before Bitcoin, gold was your risk-free asset largely. And so now it could increasingly become Bitcoin, because Bitcoin's more portable and it's got a better security profile than gold does. It's not centralized at a single point in space and time. And if we look at gold, well, we have to look at GATA's work, the Gold Antitrust Action Committee. And even in 2005, Bob Landis, he gave a talk at GATA Gold Rush 21. Anybody who's been exposed to the evidence and continues to dispute the existence of the gold price suppression scheme is either ignorant or complicit. And so why are central banks doing this? When you own a lot of something, why run a cartel to keep the price down? As Alan Greenspan testified twice before Congress, central banks stand ready to lease gold should the price rise. And the reason that the central banks have mobilized the gold and sold it into the market with these swaps and leases and refused to answer any questions about it is because their power to issue what we use as currency is infinitely more valuable than the price of a portfolio asset. And so they hold gold in the vault, and gold out on loan is the same line item. In effect, reporting cash and accounts receivable is the same thing. They don't have the physical gold they say they have. But even with gold, we don't know exactly how much gold exists or how much gold will exist in the future. There's not a blockchain for gold. And every Bitcoin transaction that's done has to use UTXOs, for the inputs and the outputs. And so we know with exact mathematical, provable certainty exactly how many Bitcoins are out there, exactly where they're moved, and we have confirmations in the blockchain. And every time a transaction's done, it's like melting down the gold bar and recasting it into a new gold bar. And so we assay it with 100% certainty, every single transaction, the quantity and the quality of the Bitcoins. We don't do that in the gold market. In fact, we don't even, I mean, we have the LBMA, which has indemnity agreements, but otherwise, like, we aren't actually verifying that the gold that we have is physical gold of a certain purity, usually. And we've seen all types of lawsuits. I mean, JP Morgan settled a lawsuit where they were buying and storing physical gold for clients, charging storage fees, and then it came out that they didn't actually buy any physical metal at all.
Yeah, they
So
were
I mean,
charging
there's a whole bunch of
storage
fraud.
fees for
Yeah, and
no
they were
reason.
charging storage fees for it. And so, but with Bitcoin, boom, you got the blockchain right there. And so you're verifying the quantity and the quality of all of these Bitcoin transactions. And Bitcoin is increasingly becoming quite a force to be reckoned with. The notional value of transactions is about $20 billion a day. And the actual economic value of those transactions, it's estimated, because nobody knows for certain, but it's estimated to be about $800 million per day. And so, okay, let's say that the CME, which is one of the chief generals for implementing the gold price suppression scheme, let's say that they try to suppress the price of Bitcoin with their cash settled futures. What's that going to do? uh, People are going to buy more Bitcoin because the price is artificially suppressed and supply and demand. And so, but people, when they buy it, they actually take physical possession of their Bitcoins. They want it in their address in the blockchain, or it didn't happen, right? And so, unlike the gold market, where you can have all of this paper gold, all of these swaps and leases and other derivatives to sell paper gold where nobody actually takes physical delivery. I mean, just look at the COMEX. It's in some cases it's 250 to 1, 250 paper ounces for every one physical ounce. You don't get that in Bitcoin. Or if you do, the institution usually fails because there's a run on it, Mt. Gox, etc. And so, if they try to engage in a Bitcoin price suppression scheme to keep this thing under control, or as the CME's chairman said, to quote, tame Bitcoin, good luck, because this monster, holy cow. We've got localbitcoins.com. There's a huge cash market for Bitcoin, like physical cash for Bitcoins. When you're dealing with exchanges, like, you have to have Bitcoins in the blockchain with confirmations to fund your accounts. Like, nobody's playing this fractional Bitcoin game, because if you play that game, you lose. I mean, there's a run on your institution pretty quickly, and you have to be able to deliver the Bitcoins. And if you're not, wow, maybe this is one of the reasons that Coinbase is delaying the letting their customers access their Bitcoin Cash, because maybe Coinbase doesn't actually have the Bitcoins. And because they didn't actually have the Bitcoins, they didn't get the Bitcoin Cash, right? Well, I mean, what other reason is there to not to wait 4 or 5 months to give your customers access to their assets? And so, it raises huge aspersions when you're not able to act and put something in the blockchain with Bitcoin. It gives people every reason to not have confidence in you. Unlike our current banking and financial system, which is just a confidence game, and they're like, well, just trust us, and we have FDIC insurance and we have SIPC insurance. In the Bitcoin world, we have learned time and time again, like, why trust any of these institutions? Do you have the Bitcoin? Prove it. Send it to me right now. And and that's what causes a lot of runs on these institutions. And so, which I think is a great thing, because hey, if you can't send the Bitcoin, you don't got the Bitcoin. Or, you got a Bitcoin, prove it. And you can prove it by sending a transaction, and it's a huge amount of Bitcoin that gets melted down and recast every day. And so you try to play with this with paper futures, especially trying to naked short it or anything like that, it could be a recipe for ruin. And so, getting back to your point about the risk-free asset and the interest rate, if we look at Bitcoin, over the last 6 years, you look at the slope it's about 0.51% per day. So that's about an 82% interest rate. So what should the interest rate be? What should the price of money be? Obviously, it shouldn't be 0%. Otherwise, the governments wouldn't have to step in and do all these bailouts and have legal tender laws that force people to accept these instruments at artificially low prices. So what should the price be? We don't know. But with Bitcoin, it's about 0.51% per day. So that's an 82% interest rate annualized, which is yikes. That's a pretty high interest rate. But maybe that's where the price of money should be.
Trace, how can people follow your work?
Yeah, so I have Twitter at Trace Mayer, and then Bitcoin Knowledge Podcast, where I interview a lot of the CEOs in the Bitcoin space, www.bitcoin.kn. And so that's how they can kind of follow what I'm doing.
Hey, thank you very much for this. It was really a spectacular interview, and I'm really glad we did this.
Yeah, thank you so much for having me on again. You're always do a good job asking some very pointed and hard questions.